Chevron, Starbucks, Qualcomm, and Apple, just a few of the names of companies announcing big share buyback programs along with their earnings reports. Apple hitting $1 trillion. A part of that thanks to the initiation of buybacks at that company. This is all part of the growing phenomenon, according to new research, that could be, quote, starving the economy. That is according to our next guest, Annie Lowrey, contributing editor at The Atlantic, adding, quote, stock buybacks are eating the world. Annie Lowrey joins us now to discuss. Annie, you really think that the popularity of buybacks is hurting this economy? Can you explain?
Yeah, it's probably a pretty complicated phenomenon. But you had corporations spending roughly $7 trillion on buybacks between 2004 and 2014. They're currently spending hundreds of billions of dollars a year on buybacks. And to a certain extent, that might be reducing corporate investment. That might have downstream effects on productivity, on GDP, and on wages. This is a relatively new thing. It's the subject of a lot of research and a lot of debate. But nevertheless, obviously, the movement from providing things like dividends to buybacks seems to be having a broader macroeconomic effect, both in terms of wealth and in terms of other important numbers.
Yeah, I mean, I would imagine they're more tax efficient. There are other reasons why the companies would elect to do that. I guess it gets back, Annie, to the fiduciary responsibilities of companies and their boards to serve their owners, their shareholders, right? That's what they would argue.
Yeah. Absolutely. And look, this is great for shareholders. Obviously, these companies are very, very profitable. They're sitting on huge piles of cash. This is a tax efficient thing to do. So I think from the corporate side, it makes a lot of sense that you would go ahead and do this. But these were effectively barred until the 1982 SEC rule change. Again, there is some evidence that's coming out of financial economics right now that it might be better for the economy much more broadly to distribute this money in terms of dividends or to encourage companies to reinvest it more. Why they're not doing that is a complicated thing. You know, do they not see enough space for investment? Are there tax and regulatory changes that might be made? But I think that you're right from the corporate perspective. Why you would do this is obvious, and this has obviously been great for the shareholders of any number of firms.
Yeah, well, we've made the point here many times, of course, it can have the impact of reducing the share count, therefore increasing earnings per share, by which some CEOs are measured in terms of a metric for their compensation. But that said, Annie, it's not clear to me, and I'm curious if you have any evidence that were there not to be significant buybacks, the money would necessarily go to raising wages for employees or even into CapEx, given those decisions are also made sort of in the world in which these companies operate, depending on how they want to allocate capital to stay competitive.
Absolutely. And I think that you run into a kind of frustrating chicken and egg here, right? Companies are very profitable. In part, they're profitable because their labor costs are relatively low. So if you had a legal and regulatory environment in which the cost of labor was higher, there would be less of this money. Perhaps you would have less incentive. But I think if you look at the work of some economists like Thomas Philippon, they're basically saying that this phenomenon is existing at the same time that you're, in some cases, seeing declining capex and investment across the economy. The ways that these things might be linked are complicated, but nevertheless, the amount of money that's getting spent on buybacks is so big, and there has been for decades concern that these are distortative, that I think that this is, again, an area where you're seeing a lot of research and a lot of growing concern. Obviously, Democrats are considering legislation that, they're not in power right now, but considering legislation to curb the process in the future with concern that employees are the ones who are a little bit getting shafted here.
It's interesting, Annie. You talk about you can spend your money on a buyback, or you can, say, build a plant, but that takes time. You got to hire people. There's architects involved. Yep. There's a process there that's not in a buyback. You would think in this deregulatory period that we're in that we'd start to see that shift a little bit back, but I wonder whether you think the trade discussion or something else is sort of clouding what should be a natural migration.
Right. So absolutely. We now have evidence. We have had evidence for a long time, starting even before Donald Trump's tax law passed, that companies were planning on, using the cash that they were going to save from the tax bill actually on buybacks as opposed to on investment. The economy is obviously running pretty hot right now. Companies are investing. Unemployment is really low. But you do have these dark clouds on the horizon. And so, I think that given the tax environment, there is this encouragement to do that. And especially, we now know that the Trump administration is contemplating another change that would change capital gains taxation rates, and again, probably, encourage some of this. So, I think the numbers that were cited in my story were actually before the tax law passed. But since we've seen that, we've seen roughly 60% of the savings from the tax cut on the corporate side going straight into buybacks.
Yeah, I mean, but a lot of this, I think, Annie, gets to this larger question that Sarah raised, which is what is the true responsibility of a corporation? It's a worthwhile debate. I mean, there was a time, perhaps many years ago, when many people thought a corporation had as much responsibility to its workers as it did to its owners. That may have shifted over time. Perhaps it'll shift back. But that seems to be kind of where all of this, at least, is centered in terms of a debate, isn't it?
Yeah, absolutely. And, we could sit here and talk for a week about short-termism and long-termism on Wall Street and whether there need to be regulatory changes or other ways to encourage businesses to think more in the long term. This is obviously a major source of concern. Again, going back to the changes that, certainly Democrats are talking about, asking for worker representation on corporate boards, that kind of thing, along with these changes to perhaps, again, encourage dividends as opposed to share buybacks are things that folks are talking about, because the concern is that the buyback is a very short-term way of making shareholders happy, but that it might not be better for the company in the long term.